the Fed is stuck now sending out stimulus checks, because if they don't send out a stimulus check, it's like a drug, then the poor patient is going to collapse and the poor economy is going to collapse. And so now investors are starting to wake up more and more. That's why even if we get a lower silver price, a paper silver price, it's going to motivate even more buying. So I think the dynamic now in the silver market, it's setting up the short squeeze that took place at the end of January and the beginning of February. That was just the first go. I think the underlying fundamentals are going to continue to get strong. And I believe we're going to see silver act like palladium. And that's not due to industrial demand, because that is what's pushing palladium price so high. It's going to be investment demand. I call it the war of the silver ETFs. And even though the ETF securities is a little larger than Sprott's PSLV, since that January 28th beginning of the short squeeze, the net increase of the inventories of the SLV, which is the largest one, 600 million ounces around, it only increased 12 million ounces. That's the net increase. Now, it was 110 more for the 3 days, but since then, it's been liquidating it. So it's only increased 12 million ounces. Sprott's PSLV is up 32 million ounces since January 28th. So we see that's the war of the silver SLVs going on right there. That's the problem. And I think investors are starting to realize that Sprott and the PSLV isn't playing games. They're actually using that silver as a real store of investment, where it seems as if, to me, and this is my speculation, that JP Morgan used that silver to help quelch the silver price, the iShares price. So that, and I think this dynamic is just going to continue to get even more interesting as more people acquire silver.
Some people call maple syrup liquid gold, and they think that putting it on pancakes and waffles is an idea that's pure gold. Well, at Miles Franklin, we think a pure gold idea is taking real liquid gold and turning it into real solid gold Canadian maple leaf coins. That's why right now, for a limited time, we're offering the purest gold Canadian maple leaf coins at just $105 US over spot. That's 4 nines of the purest gold there is in a pretty maple leaf design. And at only $105 US over spot, we'd say that's an idea that's pure gold.
Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com. Welcome back to Liberty in Finance and Reluctant Preppers. We have a returning guest. Stephen St. Angelo is the founder of the SRS Rocco Report. He's a proprietary analyst who is specialized in the connections between energy and major events affecting all other aspects of life, including economic, financial, political, etc. He joins us again this Wednesday, March 31st, 2021. Stephen, thanks for coming back on.
Dunnigan, it's great to be here, and a lot of things happening in the markets. And while there's a lot of volatility, a lot of money printing, it's all based upon the energy as the number one driver of the economy. And when we understand that, we see a whole different way of looking at the world and the economy.
It is interesting. You know, another analyst and trader and trading coach, Gregory Mannarino of TradersChoice.net, whom we've had on the show several times over the years, has really focused people's attention on what to watch and what to not be distracted by in the financial world. And one of the things that he does tell people to keep an eye on, besides the benchmark treasury bond yields and the US dollar index, is the energy, the oil cost. And he says the lifeblood of the military industrial complex, it's heavily an investment foundation for the financial sector and underpins all the equity markets. So it's not only from your perspective on looking at the macro scale of peak oil and all that sort of thing, but also as a day-to-day reference point for people who are trying to not be victimized by the financial markets. It's also something that is of intense concern and interest for people. But you've done a level of specialized research into this that surpasses by far what most people are aware of. And you've talked to us last time about the collapse of complex societies. You mentioned a book by that title, and you talked to us about how the undoing of so many great empires in the past was related to the fragility that comes from these extremely complex supply chains and extremely concentrated, dense urban populations, and technology and the energy that supports all of that. Because in a sense, it's unnatural to have so many people so concentrated together where they can't realistically source their food locally, et cetera. So, but you've done some writing just recently about making correlations between some major collapse of empires throughout history and a very basic energy source that even opens up our eyes beyond oil. Could you talk to us about that and then bring it into the implications of our modern era?
Yeah, let me just start off with the modern era first so we get an idea of how energy works. There's a gentleman named Jean-Marc Jancovici, and he's a French engineer, and he did a presentation in front of the OECD back in 2019. I believe it was September 2019. And he has a chart that shows the global oil production growth and global GDP growth, and they go hand in hand. So if we see a decline in global GDP, let's say global oil consumption or production, we're going to have a decline in GDP. And so if you don't have oil energy growth, you don't have economic growth. Now, they can spike that with inflation, but that's just the way it is. And so when we understand energy drives the economy, drives growth, then if you go back in history, it was the same thing. But I'll tell you, Dunnigan, it was fascinating. I've always looked at how energy impacts the economy, the mining industry, how much oil and diesel it takes to mine an ounce of gold and energy, and then how much human and animal labor. And that's kind of what I looked at in the past. I was basing the value of the metals based upon human and animal labor. And what's interesting, I'm reading this book called The Forest Journey, and this gentleman goes into the details of the amazing amount of wood that was consumed by the early empires, the Egyptian Empire during the late Bronze Age, which collapsed in 1177 BC is about the time they call the collapse. And then we had the Greek Empire, ancient Greece, and same thing. And then we had the Roman Empire. And when you look at these things, and let me give you an example. We talked about this earlier, that I found out that it took 10,000 metric tons of wood to make 2,000 metric tons of charcoal that would be able to smelt 1 metric ton of silver. And during the peak of the Roman Empire, which was about 100 BC to 50 AD, they were producing about 200 metric tons of silver a year. Let me tell you, that's a lot of silver for back then. That was consuming, I figured over a 50-year period, they cut down 4,000 square miles of trees just to produce the silver. That's not including copper. That's not including iron. They were starting to do iron. That's not including gold. And that's not including all the building and everything. So if you add up all the metals, it's like 4 to 6 times. We're talking 20 to 25, 30,000 square miles of forests were cut down just to smelt the metals during this. And so, of course, trees grow back, but we also find around these foundries that they denude the property, they denude, and they don't grow back that well. And so over these empires, the rise and fall of these empires were due to many reasons. But when they cut down the easy, high quality wood and they had to access further away wood, that's the beginning of the decline of the empire. And so same thing with the Roman Empire. And so what happens is peak silver happened because it's not that they ran out of the ore. they had the ore. They just didn't have enough wood to continue smelting that much silver. And that's what it came down to. And so you had peak silver. And as you had peak silver, the silver production fell. What did they do? They watered, let's say they
debased their currency. Yeah,
exactly.
Absolutely.
The reason why is because they peaked silver production. So they needed the silver to put it in the coinage, but they didn't have enough silver, so they debased it. So this is when you go back and you look, these empires and civilizations collapse due to their dependency on wood as energy. And when that became problematic, there was also a lot of other problems with deforestation. It changed the local climate. The droughts were much worse. And so this is part of the thing. And so now we move forward to today where we've placed wood. We're still using wood, but mostly it's oil, natural gas, and coal. Those are our main energy sources. And we're using a lot of it. And now I believe we're going to start in the next few years hitting what I call this energy cliff. Mm-hmm. And it's not going to happen overnight, but as time goes on, we're just going to have less energy to run the economy and to mine metals. And so it's going to be a whole different world that I don't think anybody's prepared for.
This relationship between concentrated energy sources and concentration of power and concentration of population in empires seems logical and eye-opening when you look at the concentration of power and the concentration of population in our current world. There have been quite a few technological innovations in how we extract petroleum or basically fossil fuels in the past few decades. How does that factor into your analysis of peak oil or peak gas, that sort of thing, given with fracking and shale sands and all these other methods that are coming out offshore? That was when I was going through high school and college, it was, and now we can do this offshore drilling and that sort of thing. How does that factor into our ability to keep that ball rolling of fossil fuel production increases going into the future?
Let me make a parallel, and then I can talk about the oil. When we were hunter-gatherers, on average, a hunter-gatherer would burn 1 calorie of energy to hunt and gather 10 calories of food. So that is a 10-to-1 positive ratio, and which is why many hunter-gatherers only worked about 20 to 24 hours a week. And we think they had it bad. Most people have to work 40, 50, 60 hours and work 2 jobs just to make ends meet, where they worked 20, 24. It was a different lifestyle, but they were not stressed like we are today. Well, when they started breaking the ground down again and started actually farming, gardening, it lowered the energy return on investment to 5-to-1. That's simple hand tools. But it was still a plus because it took a lot more energy to dig, maintain, but they could produce more food. And when they produced more food, they had bigger populations. Well, then they decided, let's bring some oxen or horse. Mm-hmm. And when you brought that into the equation, it lowered it below 2-to-1, 1.5-to-1, but it was still a plus because they could cut down the forests, use the wood, and they could let the animals feed on the grass. And so we didn't really consider all that. But today, our modern high-tech food supply chain system, from planting, from weeding, fertilizing, harvesting, processing, distribution, they burn 10 calories of energy to put 1 calorie food on the dinner plate. That's a huge net energy loser. And the only way that works when you have high energy EROI from oil. So when we started pumping oil in the US back in the 1930s, we were producing 100 barrels of oil for the energy cost of 1. And by 1970, it fell to 30-to-1, which is still pretty good. And at that point in time, after World War II, we were doing a lot of infrastructure, building a lot of highways, interstates, because we had this high energy return on investment. We had plenty of profitable barrels. I'm not talking about the cost. I'm talking about the energy. Shale, they estimated it's about 5-to-1 energy return on investment. So what you're starting to see now is that it's not, yes, we're tapping into this other oil like deep water, and oil sands. Oil sands is 4-to-1. Shale oil is about 5-to-1. old conventional was 100 to 1. And conventional now in Saudi Arabia is about 15-20 to 1. So they're still doing pretty good with their conventional. The issue is when you get to oil shale, which is out in Wyoming and Utah, it's less than 2-to-1. And if you want to try to get energy from methane hydrates, it's like 1.1-to-1. So here's the problem. You need an energy source from oil. It's got to be at least 10-to-12-to-1 to run this complex system. So shale doesn't pay the bills, which is why the shale industry isn't making any money. And also the reason why we're adding all this debt since the 2008 financial crisis. So this is the problem. Yes, we can go. What happened to the Roman Empire when they started to get peak wood. They got all the easy wood. They started to go into Germany, up in the Germanic area to get their wood because they had a lot of wood. Well, they had a fight for that wood.
That's right. That's right. They ran into some pretty fierce fighters there. Herman the German, we call him, and others. Yes.
Yeah, the barbarians. And so the cost to get this wood was becoming it was a falling energy return on investment for wood. We're seeing the same thing for oil. The falling energy return on investment for oil. And so now I'll conclude with this on this subject. We have this huge infrastructure of tankers, of huge underwater, deep water rigs and platforms and oil pipelines and gas pipelines. All this stuff that was built begins to decay every day, right?
And I would add to your list there, it was nuanced by your previous statement about the Romans having to fight the Germans for their wood. Is a large portion of the military complex over the past century being used to enforce access to global petroleum supplies and wars being fought. And so a lot of these, aircraft carriers and so on. So yeah, everything just adding to the list of things you're saying that are necessary in order to sustain that.
That's exactly right. And you see, you have to sustain that. So that's really an energy cost because the military really doesn't do anything positive. It really doesn't do anything positive. The thing that it does is it provides a stalemate because you don't really want to go into war. It's not going into wars is not a good thing. People die. When you build a tank, you have to use it. It's like you invested capital to build that M1 Abrams, which guess what? An M1 Abrams is one of the only tanks that has a jet engine in it. All the other tanks have diesel engines, but that thing has a jet engine in it. That just goes to show. So talk about the high complexity to run an M1 Abrams tank. And if you listen, it's amazing. If you listen to an M1 Abrams startup, you think you're in an airport. So you're right, Dunnigan. The problem is now, it's not only the problem that we're getting to lower and lower energy return on investment. We have built up so much massive infrastructure that has to be maintained. And when production starts to fall, just to provide the food and the systems is going to be hard enough. Trying to maintain the infrastructure. And so this is the problem we're facing, that I don't think a lot of people, even though Biden's trying to do a $2 trillion infrastructure program, it's not where he's going to get the money. It's where is he going to get the energy to do that? That's the bigger question.
Now, in your notes on this, well, you've been talking to us for some time about a coming energy cliff. I think that's been a centerpiece of your caution and your warning that you've been sounding for years to your subscribers and to the public. Could you update us since we last spoke with you in December? So it's been basically 3 months since we last spoke with you. Any new developments that give us more clarity and visibility of the timeline or the signposts along the way to the coming energy cliff?
Yeah, and I'll reference that we could talk about this maybe later, about the late Bronze Age. Basically, they say collapse in 50 years. We're talking about a pretty big civilization. Actually, it was globalized for its time, very interdependent upon each other, very global, let's say, globalization for the let's say 1200 BC. Within 50 years, it's basically collapsed. And so the issue is when I talk about the energy cliff, I'm not saying that we're going to see oil production in the world go from, let's say it's 95 million barrels a day, down to 10 in a year. That's not going to happen. But what happens is we start to see cliff-like declines, which we saw last year due to the pandemic. And here's a very interesting, when you look at the data, it proves it. I could say peak oil, but when I give you the data, then the brain goes, I get it. Like Shell, Royal Dutch Shell announced 2 months ago that they've hit peak oil. Now that's not because they're going to move into renewable energy. That's just because they're going to have peak oil, and they say that they're going to lose 1 to 2% a year. I believe that's under. It's going to be 5% some years. Now, if you look at their gross operating margins since 2000, for a 5-year period from 2000 to 2004, at $25 a barrel, Dunnigan, their gross operating margins were 13%. So if we fast forward to the last 5 years, let's say 14 to 2019, the price of oil was $64. Their operating margins were 5%. Now, how is their operating margins 5%, half of what it was, and the oil price is not quite triple? ExxonMobil, it's even worse. It went from 20% during the period of 2000 to 2004. It's down to 5%. What is that? That's the falling energy return on investment. And then what did ExxonMobil announce last month? They wrote off a third of their oil. And most of it is oil sands and shale oil, but they also wrote off half of their shale gas. So when you see the majors make these announcements and do these write-offs, and you see the data, well, maybe they're still producing a lot of oil, but they're not making the money. And then when they write off a third of their oil, these are clues that we're starting to hit the energy cliff. And lastly, shale has been a problem for ExxonMobil ever since they acquired XTO Energy. It's been a big problem for them because why? What they spend on their U.S. oil and gas wells in the last 3 years is almost 3 times what they spend overseas. So even though we did bring on a lot of shale oil, it's just not profitable. And so that's the falling energy return on investment. And so I think looking at these 2 examples, they're going to be more. I mean, and ExxonMobil borrowed $23 billion last year, and a lot of it just to pay dividends. And that's a crazy situation. So if the majors are having problems, what do you think the smaller companies are? And so I think over the next 3 to 5 years, we're going to see more bankruptcies in the shale patch, and no one's going to want to buy these companies up because it's just not profitable to do so. And so I think this is more indication that we are now going to start hitting a lot of major problems with oil. And you have to remember, I'll conclude with this. If you need oil to extract coal because it's diesel equipment, and then it's shipped by diesel trucks or diesel locomotives or diesel barges or diesel ships, like the one that got stuck inside the Suez Canal, that's all run by diesel. They don't have batteries to run those things. And then if you want to drill natural gas wells, it's all done with trucks and equipment, all powered by diesel. Yeah. So when you see a decline in oil production, you're going to see a decline in natural gas and coal. They go hand in hand. And an example I give, Venezuela has seen a huge collapse in its oil production. It's also seen a 40% collapse in its electricity production.
In the collapse that you foresee, and you're seeing the early signs of petroleum-based or fossil fuel-based, some people who fashion themselves as forward-thinking or whatever are dancing on the grave, perhaps prematurely, of fossil fuels, saying we need this green new economy. It's all going to be renewables. It's all going to be solar, wind, and hydro going forward. But you've seen some alarming concerns that you'd like to share, I think, about the implications that we're seeing playing out of an over-reliance too fast on transition to some of these newer forms of electricity. Can you help us understand those concerns?
Yes, you see, we have to understand that a wind turbine it looks clean, right? It looks green because it's white, especially if something's white, it looks clean. And so it just spins. And so if you look at it in its, in a pure sense, like it was made from a massive Star Trek replicator and then it was just put there. Well, then, unfortunate that it kills a lot of wildlife, a lot of birds, but it's not making sulfur dioxide, which coal power plants do. Mm-hmm. And it's not leaking methane, which natural gas plants do. And so it looks clean, but when you go back to supply chain, it's produced and made and manufactured by consuming and burning a massive amount of fossil fuels. You cannot make a wind turbine and erect it without burning a massive amount of fossil fuels. And this is the problem now. We're starting to see in several countries, like in Germany and also in Australia, that's really ramping up their solar and wind. And we had a preview that happened in Texas, right? And I'm going to talk about that because it's important to understand that while the natural gas and coal did fail in Texas, along with the wind, natural gas was actually the winner, because I had one of my readers email me this article up in New York, because after the freeze happened, they interviewed a CEO from one of the wind farms up in New York. And they said, well, we don't have those problems like Texas does, because up here, we're smart. We winterize. Mm-hmm. We winterize our wind turbines and the blades. So if it freezes, we could free it up and they're working. And so the big thing that has happened after the freeze and all these poor homes that didn't have electricity was that Texas didn't winterize. Well, I looked at the data, Dunnigan, and the New York ICO grid, I went to the EIA, looked at the information. Before the freeze hit New York, wind was 7.4% of the power. During the freeze, it fell to 0.6%. So I don't know what these guys, the CEOs, are saying up in New York that they can, winterize. That just shows you it collapsed in New York. The Southwest grid, it collapsed in the Southwest grid. It was 35% before the freeze. It was 11% after. And then we look at the mid-continent grid, which is the upper Midwest. It went from 17 to 7.6. So it failed. And in Texas, the ERCOT grid, it was 33% before the freeze. It fell to 11% during the freeze. So wind failed everywhere. It didn't fail in California, New York, where it didn't freeze. But so the problem with Texas was Texas has a lot more wind to their base power. Their coal is only 24%. The mid-continent grid and the Southwest grid averaged about 44%. And New York has a lot of hydro and nuclear. So they have a lot of this, I call it base power. If they get into trouble, they could ramp that up. Well, do you know natural gas in Texas was only 25% of the power before the freeze hit? At the peak, it went to 61%, and then it failed. So it came to the rescue, natural gas did, until they had the problems with the freeze. So I think, and the chart I want to talk about now is the U.S. plans to increase solar and wind from 12% this year to 29% by 2030 in 10 years. And a lot of it, I'd say 70% of it's wind, the addition. What happened in Texas is going to happen throughout the United States when we start adding that much wind and solar. Because when they start going off, then you have this intermittent problem that you have to add the natural gas. And what happens if natural gas production starts to fall? And so these are issues that we're not talking about. And I think as the world goes to more green, we're actually going to push ourselves closer to this cliff and faster than if we just continued business as usual.
Two follow-up questions on your last statements. How is it that solar is at risk of adverse weather events? We understood the freezing that affected the wind turbines, but why is solar at risk?
Well, if it snows, they get covered. They get covered, and if it's the solar panels get covered, they also get covered with dust and cloud cover. And the thing is, here's the thing about solar different than wind. Solar shuts off at night.
Hmm.
It's one thing when you have a small percentage that shuts off at night. Well, what happens when you start bringing 5, 10, 15, 20%? Then at night, that solar just shuts off. And then you got to add the natural gas. And so because a lot of people go out to eat and then they have their lights on at home. And so the electricity doesn't drop off at night. And so the problem is the more solar you add, the intermittency problem with solar is mostly within that 24 hours. And so I can imagine these grid operators that have to balance all this stuff out. Not only do they have to balance the wind that dies, they have to balance the solar that either falls off 100% at night, or it's being restricted due to cloud cover or snow cover. And so again, when you have wind and solar, it's 5, 10% of the grid. You can manage that. But when you start pushing 25, 30% of the grid, then you're going to have massive blackouts and brownouts. That's just, and I think the cost of electricity is going to go up.
One of the principles or technologies we've been told will come to magnify the importance of solar is storage. So battery storage, that sort of thing, any other technology that can be used to store that power to take care of that diurnal day-night problem. But you're saying that again is a technological solution that can have its own vulnerabilities. But secondly, it doesn't save you from some of these other, snow cover, cloud cover. On the point of natural gas, there's been claims made by people who say, like, look, as preparedness, our channel used to be Reluctant Preppers, and we talk a lot about individual household preparedness. People are concerned about the loss of electric power from the grid to their home. So they look to, for example, a natural gas generator as a potential backup plan B in the case of storm outages, that sort of thing. Is it true, which some people have claimed, that a natural gas generator will be of limited duration effectiveness in the case of a regional electric power grid down, because they claim that the pumps that provide the pressure on the main gas mains are electric powered, and therefore the whole thing, the pressure will be lost eventually? Is that the case?
Yes, that's part of the issue. There are issues that the mechanisms that run can shut down, but we have to think about this too. And I don't think people think about this. I've driven over the country quite a bit. And if you do a lot of driving off the interstate, you're going to see where it used to be huge piles of coal. And what they do is the trucks bring the coal, these double trailer dump trucks bring coal, and they dump them in this huge pile. And then it gets loaded on rail, and it's taken to the coal fire plant. And next to the coal fire plant, there's a huge pile of coal. Mm-hmm. Natural gas doesn't do that. Natural gas is just in time. Comes out of the well, goes into the pipeline, into the natural gas generating power. Or it's in a tank as LNG or propane, whatever. And then it gets stored, right? Japan had a huge problem in December. Their LNG prices skyrocketed because they had the same thing that happened to Texas. But because they had Fukushima, they have shut down most of their nuclear power plants. And what have they done? They have built these natural gas power plants. Well, they don't have storage like we do over here, these caverns that are in around the Gulf of Mexico. We've got these huge caverns where we store a lot of natural gas. They don't have that. They only have basically is LNG, and they were running very low. So what's happened now, even though we have a lot of storage, that you can't really bank on that. So we have moved from coal and nuclear, which were very base, they're very stable, and the coal out there that's in that pile could last a month or 2 months if it had to. Mm-hmm. Well, if the natural gas gets shut down, you may not have the natural gas. And so this is the issue. We have gone from, I call it the pre-1950s grocery store, a model where in the back of the store, there was a lot of product back there.
Right. Inventory, stockpile. Yeah.
Yes. We've gone from that kind of business model that he had a couple of weeks of certain products, maybe a month, to these trucks that are just moving on the interstate. That's the storage. So we've moved from the nuclear that produces, and they have to put in new uranium every 18 months. But it's stable, right? I'm not saying it's safe, but it's stable.
You're saying that the fuel stockpile is there is a stockpile there that's not instantaneously depletable. It's going to sustain for a period of time.
Yes, with coal and nuclear, and then let's forget all the bad things about them. I'm just talking about as base power, as a consistent, reliable base power. Well, in the U.S., we're cutting coal. And we're adding natural gas. Now, natural gas is fine, but that's only if you can continue to produce the natural gas. And so I think the issue is we're switching. The world is switching from a kind of a system of power, base power, that was more reliable to a more just-in-time system. And wind and solar are even worse because unfortunately, after 15 years, you got to replace that wind turbine in the blades. That's a very high-tech piece of machinery that either has to be remanufactured and the blades have to be replaced. And so, it's one thing when you've got a small amount, 100 wind turbines. When you've got tens of thousands across the world, these each year they have to be replaced. Well, in 10, 15 years, all these are going to have to be replaced at the time when the world is getting into serious trouble with oil, natural gas, and coal. And so no one really sees that dynamic.
One of the principles that you've discussed both in our previous interview and this one is this idea of centralization and concentration makes vulnerability. It's kind of like in Star Wars when they had the Death Star and it seemed invulnerable and they realized, it has this weak spot. So you keep helping us to see what we might not otherwise be seeing, and that is the vulnerability that comes with this concentration or this centralization. What about the principle that people have advocated of distributing, instead of centralized power and energy sources and systems like you're describing, localized, distributed, where ideally every household would have its own, whether it's solar, wind, wood stove, whatever. How sustainable is that, and how does that scale out to the current global population if we tried moving in that direction, everybody having their own homestead with sustainable localized power?
Well, I think here's the problem. If you look at a chart of oil production and population and metals, it goes up exponentially since 1900. They all go up exponentially. So that's where we're at now. And that only worked with oil. When you go back and look at these ancient civilizations and empires, it was the wood, right? That's the wood. I bet you if you would take a look and graph the wood consumption, there'd be a chart. It would go right along with the population and metal production. And so when that fell, then everything did. And right now, there's over 7.8 billion people. We don't have this energy to maintain the system. And so I think that's the problem, Dunnigan. There's no way that we can go to some kind of out of the box system that we can just put locally. Now, people talk about these thorium reactors. Well, they still haven't got the technology down, but it's still high tech. You see, what people don't get, they still think in a Star Trek replicator sense. Well, we'll just make we'll make these thorium reactors. Well, first of all, the world is run on liquid oil. That's the just-in-time. That's the blood system. If that breaks down, like we saw during the pandemic, then food doesn't get distributed. Then the Suez Canal gets stuck with a ship. That's not run by electricity. That's run by liquid fuel. And you cannot just plug and play something else. So we cannot transition to electricity. But the thorium needs all these high-tech components that only work when you have a massive high-tech supply chain. If you don't have that high-tech supply chain from 20, 30, 40 countries, you can't make a thorium reactor. I don't think people realize that. They don't realize, they just think we'll make this, we'll make that. but you need a very complex society to make that. And for my subscribers, I'm putting together the comparison between the collapse of the late Bronze Age, which happened about, they're saying 1220 BC to about 1175 BC, that their vulnerability, of course, was wood, but it was tin. And they needed 10% tin to make the bronze 90% copper. And there wasn't a lot of tin. They actually had to go to Afghanistan to get a lot of tin. And this was in the Mediterranean and Egypt. And so when the supply chain started to break down, the whole thing collapsed. And what I say today, what is the same thing that it's the oil, right? But what is the tin today is the semiconductor. And you've heard this. The semiconductors there's a shortage of them right now, and they're closing auto plants down. And so without semiconductors, the world is run by computers. And without a constant supply and a big, very high-tech global supply chain, because it needs 50 countries to allow a semiconductor to be possible. You can't do it with one country or 4 countries. You need 50 countries that allows a semiconductor to happen. Well, when you start, like the Death Star, you start, getting certain parts of that supply chain broke down, the whole thing kind of falls apart. And then without semiconductors, the banking system, our digital banking system that you and I rely on, it doesn't work, because those banking servers have to be replaced about every 4 years. And so these are the dynamics that we don't think about, because someone else specialized deals with them. And I think this is the issue. So the semiconductor is going to be our downfall, like tin was for the late Bronze Age.
And not only the banking system, but people who say, well, we're going to opt out of the centralized banking system by going with the distributed crypto solution like Bitcoin. That doesn't solve that problem then.
Yeah, the Bitcoin, there's, of course, Bitcoin, hit 60,000. I didn't think it'd get there, but it's there, and that's fine. If you want to speculate, it's a great thing to speculate on. But as a store of value for a long term, if we think the banking servers that need to be replaced 4 years is bad, Bitcoin miners, it's 2 years. But that's what it is. They got to be replaced about every 2 years. And there's a lot of semiconductors in Bitcoin miners. And where is most of the Bitcoin mining taking place? Well, as of the last time I checked, it was 80% was in China and Mongolia. That's not decentralized. And I said this in my last interview, you can't put a Bitcoin in your pocket and go to a pawn shop or a dealer and sell a Bitcoin. You need a Bitcoin miner and an exchange. Well, if you want to sell your silver, you could go down to a local dealer. You can go to a pawn shop. You don't need an intermediary. And right now it's working. The Bitcoin miners are working. The exchanges are working. Everything's working, and that's fine. But that's going to be very problematic in the future. And a lot of the high tech guys, they're so focused on what they're doing. They don't see all these horrible problems coming with energy.
You've mentioned several times the relationship of energy to silver, and you mentioned tin, strategic materials and semiconductors, strategic materials to societies, empires. Talk to us a little bit about our current silver market fundamentals and what gives you pause as you look at that from the eyes of this dependencies and as an analyst.
I've been looking at the top primary silver miners. Because back in the late 1800s, when the U.S. was producing a lot of silver, it was average to produce 50 ounces a ton. That wasn't unheard of. That was like the guys, when they would go to the saloon, yeah, we've got 90 ounces a ton, we got 100, we got 50. When they got 50, they looked at them and laughed. Now, back in 2005, the top primary silver miners, it was 13 ounces a ton. Now that's a lot. I did the data for last year. It's 5.8 ounces per ton. That's the average, the top 7. That's 55% in just 15 years. So that means these companies, if they want to produce the same silver, they have to move twice as much ore, which takes more energy and a lot more human labor and materials and parts. And so that's one dynamic of the silver market. Another thing that's changed, I think it all changed last year. It's been building over years as there's a small group of very motivated silver investors. I think there's a few high net worth too, but mostly there's a lot of people very interested in silver. There's a small percentage. And last year, we saw for the first time total silver investment surpassed industrial demand for the first time. It was like 585 million ounces and industrial demand was 490. So usually it's about half. And that was ETF and physical demand. That was both. And so you can't have too many years like that, which now I just spoke. There's a precious metal that I sponsor the website. And I just spoke with, his name is the general manager, Dan. He said Monday when he got into his office, there was 117 calls on his voicemail. And now to buy a Silver Eagle, you're going to pay $10 over the spot price just for a Silver Eagle. So what's happened now is there's so much demand for retail products, but the wholesale market, there's a wait for 3 or 4 weeks to get a 1,000 ounce bar. I mean, in the past, you could always get the 1,000 ounce bars, but now there's a back order to get the 1,000 ounce bars. And so that means there's a tightness in the market, and we're seeing a huge change. And I think, Dunnigan, this is going to get much worse because we know what the central banks are going to do. The Fed is stuck now sending out stimulus checks because if they don't send out a stimulus check, it's like a drug, then the poor patient is going to collapse and the poor economy is going to collapse. And so now investors are starting to wake up more and more. That's why even if we get a lower silver price, a paper silver price, it's going to motivate even more buying. So I think the dynamic now in the silver market, it's setting up the short squeeze that took place at the end of January and the beginning of February. That was just the first go. I think the underlying fundamentals are going to continue to get strong. And I believe we're going to see silver act like palladium. And that's not due to industrial demand, because that is what's pushing palladium price so high. It's going to be investment demand. But I do want to talk about the SLV and the PSLV one more minute. I call it the war of the silver ETFs. And even though the ETF securities is a little larger than Sprott's PSLV, since that January 28th beginning of the short squeeze, the net increase of the inventories of the SLV, which is the largest one, 600 million ounces around, it only increased 12 million ounces. That's the net increase. Now, it was 110 more for the 3 days, but since then, it's been liquidating it. So it's only increased 12 million ounces. Sprott's PSLV is up 32 million ounces since January 28th. So we see that's the war of the silver SLVs going on right there. That's the problem. And I think investors are starting to realize that Sprott and the PSLV isn't playing games. They're actually using that silver as a real store of investment, where it seems as if, to me, and this is my speculation, that JP Morgan used that silver to help quelch the silver price, the iShares price. So that, and I think this dynamic is just going to continue to get even more interesting as more people acquire silver.
You've got a question here from David McElhenney, who is one of our viewers. He says, what does Steve think are the reasons silver and gold prices remain low in the face of increasing demand?
Well, I think, Bitcoin is an interesting setup, and it's true about Bitcoin, even though there's futures now on it. The banks don't own silver and gold, and the futures markets tend to control the price. And so the reason why silver didn't really go up, especially the SLV it went up, but it didn't go up like GameStop did. Well, because do you know what JP Morgan did? Added 110 million ounces of silver to the SLV over that 3-day period from January 28th to February 3rd, JP Morgan added 110 million ounces. I don't think it added, it just kind of, it borrowed it from other vaults, mostly in London. And when you can add 110 million ounces, you can add, I think they added 120 shares. Million shares were added. So when you're adding 120 million shares, what are you doing? You are watering down the price move. Well, you see, that didn't happen with GameStop because they're not adding 110 million shares to GameStop. And so this is part of the issue with silver. Now, the problem is we're seeing that people are starting to take delivery. I heard the Perth Mint is having problems in the Perth Mint. Even the Royal Mint had to cancel, and that's in England. The Royal Mint had to cancel orders. I heard the U.S. Mint has put a temporary cancellation on the smaller denominated gold eagles, like the 1/4 ounce and the 1/10 ounce. They're only selling the 1 ounce. And so I think what's happening now, we're just in the beginning stages of this physical. At some point in time, the physical market is going to drive the price. But unfortunately, the paper futures market is still driving the price. That's the best way I can answer it.
Yeah, there's been quite a bit of debate. You mentioned about banks not owning the metal, but then you mentioned JP Morgan, which is one of the largest commercial banks in the U.S. And according to Ted Butler, has a record stockpiles, record in all of human history of both physical silver, particularly, and also gold. And we've had reports that over the 18 months prior to the Basel III Accord, where banks promoted gold to being a tier 1 asset, they were front running that decision by acquiring more physical gold in the previous 18 months than they had in the previous 60 years. So it may be an opportunity for acquisition, as you mentioned, as evidenced by JP Morgan's move at the end of January, this last period of time. So it certainly is thought-provoking. We've got another question from, and you've alluded to this at other examples throughout history, but we also look for more recent examples. Maria George has said, Steve has mentioned that Venezuela went into hyperinflation due to increased expansion of the money supply, and also they reached peak oil production. I'm concerned that this could happen outside of Venezuela.
Now, you see, about the hyperinflation, Venezuela is, unfortunately, it's partially due to the problems with their oil production collapses, partially due to their political system, but it's due to its heavy oil. And it's not really profitable at the prices we had in the last several years, which is why production really collapsed. It's not really profitable. And so what do? You print money. Now, that's exactly what they did. They print money. The difference in the US and other central banks, if you follow some of Stephen von Meter's work, he calls himself the bond king, but he really is a big believer in gold and the gold miners. There's a liquidity trap. Even though we're printing a lot of money, and let's say this money goes into my account or your account, the stimulus checks, right? Well, when that money goes into the account, it's this extra money. The banks basically buy treasuries to offset that money. That's what they have to do. Or they could sell the treasuries and get reserves on the Fed's balance sheet. So a lot of this money it's not causing inflation. It's stuck in the system. Some of it's getting out. Rather, I think what we're seeing is speculation. There's a lot of speculation pushing these prices of oil, of copper, of lumber, and there are dynamic supply and demand too. And the banks aren't really lending, and that's when you get inflation. Where if the Federal Reserve, they want to do this digital dollar policy. And that would be somewhat like what Venezuela did, but digitally. What they would do is they would not go to the U.S. Treasury. The U.S. Treasury would have to issue debt, get the money, and then they would send those checks to people like they did the stimulus. Instead, the Federal Reserve would just add it on their balance sheet, and they would send the money out, and it wouldn't increase the debt, and it wouldn't impact the interest rates. because when you're buying treasuries, you're pushing the interest rate lower, right? And then, even though it's artificial. So when the Fed starts to do that, they said they're not going to do this for a couple of years because they want to make sure they get the technology right. That's when you can start seeing real inflation. And or when people start to get worried about the value of the dollar. So that's hyperinflation. Not only the printing, but it's also people start losing faith in the dollar. And the barometer for that is really not Bitcoin, but it's gold and silver. So I do think the central banks are trying to manage the upward price move of the metals. They're trying to manage that because that's the barometer of the dollar, but they don't push it too low because why? Because then the mining industry would lose money. So it's kind of a game they're trying to manage the upward part or the upward move of the metals. I hope that explained that enough.
Well, it certainly brings a lot of concerns to many areas that some of which we've been talking about already, some of which we need to be talking about more so that we make prudent decisions. In a nutshell, are there specific recommendations? We try to provide just not just awareness, but actionable insight for people. Are there any actions you could see that individuals could or should be taking to help reduce their risk from some of these mega factors that are playing out that have in the past led to collapses of major empires and societies in the past?
That's a tough decision because you see, it's like not everybody can be rich, right? The only way you can have rich people is if you have a lot of poor people doing the work. So the idea that everybody can be rich, that's like a non-starter. To have rich people, you have to have poor people. That's just the way it is. And if you give everybody $1 million, then who's going to go wait tables or drive the truck? And so that's the problem. So people just can't get money, because there'd be no one would want to go to work. They would want to go out and spend their money. And so the issue is, this is how I see it happening. If I look at it kind of as a doctor, just being problematic about the health, the big cities and the big suburbs are not going to be the places to be in the future. And it's not going to happen tomorrow. So the thing is, it's a good idea for people to learn how to produce some of their food, to look at energy solutions that can power their home, keep them warm. That may be wood energy, and I think we're starting to see this exodus since the pandemic from the big cities because they were shutting them down. And some of the wealthy people said, wait a minute, I don't want to be stuck in a city during a pandemic. So what do? They're selling their homes and they're moving out to the suburbs. Well, to me, the next exodus is going to be to the country. Because in the country, a country home on a modest piece of land, in country homes in that area, don't take a lot of energy to run. If you have to kind of sustain yourself off them. But a suburb, grass has to be cut. The natural gas to heat the home has to be piped in. It has to be maintained. And all the values of that real estate are based upon a lot of traffic, right? Cars going to work, trucks moving around. Mm-hmm. So I think that the actionable things people need to do is to kind of figure out how they can do more for themselves, how to grow more of their own food, how to start thinking about if they're living in a big city or a big suburb, to start, they could grow their own food in their backyard, to think about in the future, maybe looking more towards the country. I think that to me is the wise thing to do. And now, unfortunately, not everybody can do it, but that to me is the advice. Excellent. Well, Steve, we're out of time, but we've learn more than one could believe possible each time we speak with you. We'd love to have you back sooner than 3 months. We just want to thank you very much. If people want to find your work, they should go to srsroccoreport.com. Yes, and I did. The one important thing I failed to remember, an actionable thing to do, and this is it's basically everyone knows this that follows your work. The precious metals. It took a lot of energy to produce them, so they're a store of this energy equivalent value. That's what they are, and that's what they were back during the ancient Rome. So when the energy becomes problematic, the stocks, bonds, and real estate are not stores of energy equivalent value. They need more burning of energy in the future. So they're IOUs. So people need to start transitioning out of them and into the metals to protect their wealth. And so I think that's a very important dynamic. But yes, you could go to the srsrockreport.com. We put out some public articles, but we have very good detailed information for the silver and gold members. And I also put out public videos at the SRS Rock Report YouTube channel.
Folks, also don't forget to sign up for our Liberty and Finance all-free newsletter that gets all of our guests listed for you. All of their interviews, any links and resources that they provide are all going to be in there with full descriptions of every video, so you won't miss a single one. You get on that email list by just going to libertyandfinance.com, putting your name and email address, hit subscribe. We'll get you a confirmation email out. You confirm and you're in. We've been speaking with Stephen St. Angelo, founder of the SRS Rocco Report at srsrockoreport.com. And Stephen, thank you very much for joining us on behalf of our audience here on Liberty and Finance.
Thank you.
Some people call maple syrup liquid gold, and they think that putting it on pancakes and waffles is an idea that's pure gold. Well, at Miles Franklin, we think a pure gold idea is taking real liquid gold and turning it into real solid gold Canadian maple leaf coins. That's why right now, for a limited time, we're offering the purest gold Canadian maple leaf coins at just $105 US over spot. That's 4 nines of the purest gold there is in a pretty maple leaf design. And at only $105 US over spot, we'd say that's an idea that's pure gold.
Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com.